wanted to implement over the course of the last couple of weeks, and since we are in the thick of earnings season, we're going to bring in some earnings analysis of some of the names that reported within the last week or two, and we'll touch on those in a little bit. But something else that I want to do, and probably more on a more regular basis, and that's go through this TA page scan. And there are some, of course, that will be more relevant than others on any particularly given day, right? So taking a look at some of these, my favorites tend to be like an inside day. Well, you look at what we have on our TA page scan for inside day, and it says none. So that's not going to be very relevant today, is it? Well, what happened yesterday? We had a big sell-off, right? So we're going to want to look for something like oversold conditions. And in this case, we've got a lot of high flyer names that are on this oversold list. So I'm looking right here on the TA page scan. So I'm going to highlight it for you. And look at the names that are mentioned in this oversold category here. Adobe, Autodesk, ALGN, Amazon, Alibaba, you get the picture. A lot of high-flying names, a lot of names that people like to day trade. So we're going to take a look at these and see what the setup was, what it looked like, and how it responded, so that you can run through these and find your own particular names that you like to trade and see how they play into your own particular strategy. So we'll start with a couple of the well-known ones, and we'll start with Adobe. So I'm throwing the Adobe chart up on a daily chart here. So just to give you some perspective here, these are down aggressively compared to the 5-day average range. So as you can see, Adobe gap down lower, closed off its session lows, and closed around the 280 level. And today you can see this one is gapping up by 1.3%. Now what we want to look at is, was there some opportunity to get involved in this one? So I'm going to bring in Gavin, and we'll see if we can find ones that had opportunity or that are setting up for an opportunity. So welcome back in, my man, Gavin McGuire.
Hey, Jim. Welcome to the segment that we've been running since last quarter.
Nah, this is a little bit different. So yes, we are going to talk about some earnings, and we did dabble in that a little bit last quarter.
I ran it a lot, actually.
Huh?
We ran it a lot.
Okay, well, I don't want to fight about naming this and when we did it and what we do. Let's just talk. Let's just dive in. All right. So this one was tough. I'm looking at Adobe right now, and I'm looking at how this one closed yesterday. And really, theoretically, if you bought it on the close, you'd be sitting pretty right now. You'd be up about 1.5%. However, it didn't really give you an opportunity to do that, because this scan came out last night so that you can view it this morning, and you didn't really get a good opportunity in Adobe. Now, what I do see developing, though, is an inside day based off yesterday's wide range, and today, if we stay within yesterday's range, we'll have a lower ranged inside day, which is one of the ones that I really like. So why don't we start with Adobe and see, it hit the list for the oversold conditions, but is this one that you're strategically going to be looking at as an opportunistic trading vehicle?
Possibly. I mean, like you said, it's got the inside day. It's that 275 area is coming in for support, and that would have been where we broke out post Q2 earnings. They had a pretty good earnings report, and that led to that launch off the 50-day moving average. So, I mean, it's definitely coming in towards some key support levels. It's broken below the 50. A lot of that could be viewed as headline related, though. So, I think now we got it testing the 100 at 282. So there's definitely, with that ample support and that oversold condition, a area for this to bounce for sure.
All right, yeah, and I like this one trading right around the 100 EMA. I want to look at this one on a weekly chart, though. And nothing really on a weekly chart. I bet we're not going to find anything on a monthly chart either. Any of my favorite moving averages. Nope. So I guess what I want to see in a perfect world, what I'd love to see is this one close above the maybe slightly above the 100-day EMA around 285 without breaking out from yesterday's high. That would be a really nice inside day that I'd be looking to follow up with on tomorrow. So let me scan a couple of these other ones, Amazon, and see if this one had anything going. I bet a lot of them are going to look like this, though. A lot of the charts will look like this. Well, Amazon,
Amazon's
not really.
sitting right on its 200 here. That's pretty interesting chart.
So here we go. This is a good one to break down because it's really doing something that you'd want to see. So it falls on the oversold conditions, and it met the 200-day moving average. Buyer stepped right in. So basically, what I'm looking at right now is your risk in Amazon. The risk is breaking down through that 200-day, and it's a pretty low setup. The question is, are you a buyer of this one? Considering we are down. What's it down? Well, it's down just a little bit. It's down $4.50. But really, if you're a bull of the market, if you think we can get a late day rally today, this one looks really prime for that thing. What's your take, Gavin, on this?
I like it. It's right at the 50 weekly as well. Basically the way I see Amazon until they get things situated on their earnings. They've posted 2 poor earnings quarters in a row, for them at least anyway. So I'm just seeing a sideways range breaking out between 1650 to 2000 that I think will be where you're going to see it trading a lot over the next couple of months. And, right now we're near the lower end of that channel. So I think it's definitely an interesting buying point right here. If you're a bull of the market, which I am for the longer term trend here, at least until I see some bigger signs of cracking, and we just haven't seen that in the macro data or earnings so far. So I'd like Amazon at this level here as a bounce play for sure, because I think you basically got a range bound stock, and again, you're towards the lower end, and you got some good support with 200 daily and the 50 weekly.
Yeah, not only that, there's a few gaps in this stock too. And I also drew a trend line a while back. This was probably when they had their earnings. I drew this one. And what I see here is if that 200-day can hold, if that area can hold, well, then you can target that gap close, which is up around 1806. So that's over 50 points with a risk of, I don't know, let's see. Maybe, I mean, even if you want to have a loose risk, like $6 or so. What's the trade right now? 50,
You'd keep it that
59
tight.
What's that?
You'd keep the risk that tight, 6 points. I think for this one. What's the average true range on this? Let's take 37. That's pretty.
Yeah, well, what I don't want to see happen is this thing close below the 200-day.
Sure.
That would be the warning sign. So if you, in a stock like this, since it's a high-price stock, I'd keep it small. I would want the 200-day to hold, and so I want yesterday's low to hold. And if not, then I'd be out of this one. So that really is what I'm assuming the risk on. Ideally, what you'd want to see is it stay put right now, maybe catch a little bit of a bid. So if you got involved right now, you keep your stop pretty low. It's trading 50, 59, right? Is that what you have, Gavin?
Yeah.
Okay, so it's trading right around 1760, and then yesterday's low ended up being 48.78. So maybe like if you wanted to keep it loose, maybe a $10 to $15 risk. Kind of a lot if you trade big size, but ideally what you'd want to see is this one catch an afternoon bid and then hope for the close of the target. But on a relative basis, this one looks pretty good from a risk-reward standpoint, AMZN, and I'm basing this off that oversold category in the TA page scan. So I would throw this one on the radar. You endorse this one?
Yeah, I do. I do.
All right.
I think a lot of fund managers view this as a must-own. I think that there's probably a few people that were kicking themselves after that May sell-off that they didn't buy in for that run back up to 2000. So I think that they're looking at this as a second opportunity. Again, I don't think that it gets over 2000 with any sort of conviction, but if you're a buyer of the overall markets and of the idea that this is just a shakeout and a little bit more of a headline-driven fall, then I think you got to be jumping in and buying this at a key support level.
All right, and then let's look at Alibaba, because I know this is a name that we talked about a little bit yesterday because China sold off so hard, and this ended up on the same scan, the oversold conditions. And as soon as the chart pulls up, we'll take a look at it here. And all right, so this one is interesting too. It didn't really give you a great opportunity to get involved today because it didn't necessarily gap open, but it did open relatively high. Yeah, I guess it did gap open, and it came down, traded within yesterday's range, but then popped back up. So I don't know. Is this the type of stock, Gavin, that you say, okay, I got the confirmation I was looking for. Now I think it's going to make a run, try to close that gap, and then it gives me confidence that we're going to make a run and make potentially test that 180 area.
I've got a little less conviction in Bob. I mean, this is what I would say about Bob. If I was buying it and holding it for 5 to 10 years without thinking about it, then yeah, I'm fine with buying at this level. I don't think it is as much of the tradable bounce as in Adobe or Amazon here in the short term, though. The chart's a little more broken, as it's now pretty convincingly below its 50 and 200-day moving average. You have China is certainly performing a lot worse than the U.S. So when you're comparing the Chinese consumer versus the U.S. consumer, that definitely tips it in favor of Amazon a lot more. And then also with Baba too, with the consumer, you just have that decline in the yuan, which hurts their purchasing power as well. So I don't like Baba as much as I like Amazon or Adobe for the ones that we've looked at. So I wouldn't be trying to be a hero on this. I'd like to see this settle a little bit more myself, and also see maybe a little bit better economic data out of China. But this one looks a little sloppier to me than Amazon or Adobe.
Okay, all right. I think that covers, some of the bigger names that ended up on that TA page scan. Again, I think we're going to make this a little bit more regular, so we can go through these and see how to establish new trading ideas and how to make this page work for you. So we'll do that as the days come. Now, let's get into some of the earnings, and we're not going to touch on many of the earnings that came out last night or this morning. We're going to look at some of the ones that came out either earlier last week or towards the beginning of earnings season. I guess Amazon kind of falls in that category because they already came out, so we broke that one down already. One name that we haven't really talked a lot about is Tesla since its earnings. So this kind of falls under the category that it gets a lot of buzz, and then all of a sudden it kind of falls off people's radar. But it is a pretty good trading vehicle, and right now it's testing the 50-day moving average. So let's break this one down.
Yeah, this one jumped out to me because I thought it was holding up pretty good. When I was just going through the list of tickers, I had Tesla obviously, and I was expecting to see this thing closer to the May lows, but I just dipped a little bit, but holding its 50-day moving average, I was encouraged by this action here.
Yeah, are you interested in getting involved in this one?
I am, because again, with that 50-day, you could sit there and drop in a trade, risk six. It's at 225 right now. You could risk six on a pretty well defined support area there from that 222, the 50-day moving average at 225, and either you're going to be right and this thing's going to push back up towards 243 with a shot to break a little bit higher if you get a little bit of market momentum behind it, and then sending that back to that 260 pre-earnings level, or you're going to be wrong and you're going to be out for the 6 points. But for a risk reward, I think it's a pretty enticing level right here.
Yeah, I do too. I can see this one, if that 50-day holds, I can see this one trying to make a run at closing that gap at right around 258. So that gives you at least, 30 points of upside versus $6 of risk from here.
Yeah.
I like it. Now, what I would like to see, though, is this is what I don't like. If we close at the session lows, because then we would have an outside day down in what I see as a downward moving, a downward sloping trend line here. That would keep me on the sidelines of that one. Ideally, I'd like to see some buyers step in the afternoon time. But you know that this one's going to go with the same way as the NASDAQ. So if we get pressure in the NASDAQ overall, you're going to see pressure in Tesla as well.
Yeah, I mean, for me, if I take this trade, I think a must is going to be closing the day above the 50-day.
All right. And one thing that I am noticing right now, it's the IWM, which has turned negative, and that's not a good sign for the risk assets. So this one has been a bit of a leader, and it's not boding well right now. It's the only one in the red. It's down 0.2%, and we still have the SPY and triple Qs up about 0.4, 1%. Diamonds up 0.3, but the troubling one is the IWM, the small caps trading down 0.2%, and it's still got an inside day, so not a whole lot of damage yet, but still, we are below the significant moving averages. We busted that 200-day yesterday, so that's a little cause for concern. So just wanted to highlight that before we continue to move on. That could cause some weakness here in the markets. All right, now another one we want to touch on here is Xilinx, XLNX, and we get this chart pulled up. Yeah, another outside day down that's brewing, and this is troubling because it could not hold that 200-day. Tried to make a run. Looks like we closed the gap. This one, man, in hindsight, this was a nice little short looking setup. So what you want to do when you look at one of these is, you saw yesterday we closed below the bottom of the opening range, and you saw this one pop up, and it found resistance right at where that gap is. That's exactly where you would expect resistance to be. We talk about it all the time, and that was a selling opportunity. Unfortunately, we don't have a time machine to go back and do it. But now what say you, Gav?
Yeah, no, I don't like this one either. I mean, I've jumped into AMD in the semi side 2 days ago, or yesterday, I should say. But this Xilinx, they used to be at the forefront for the semi space, but ever since they broke down after their Q1 earnings report, when it was trading around 140, hasn't really been able to find a solid footing. It bounced off the 200-day moving average in May and rallied going into this earnings report. But, it's the typical earnings report that we've seen with inline and then weak guidance. So there wasn't anything sticking out per se. But this recent selling and the break of the 50 and now the 200, obviously we got the only problem I have with trying to short it at this point, Jim, is it's already pulled back about 40 points from those April highs, and you're coming into that Psych 100 support area.
Yeah.
So it's a little tough, but I don't like it as a bounce for certain, and I'd be looking more at trying to fade any sort of bounce action that we could get. And this really hasn't seen any sort of interest today on the early market wide bounce, so that has me cautious around XLNX.
Yeah, me too. Let's take a look at ZM. This is one that Scout Trader threw on the radar. Looks like, I don't know if anyone participated in this. I don't think it was an official trade for him, but he did throw that one on the short radar, and it has declined ever since he put it on there. So if anyone is out there and did take that trade in ZM Zoom video, he would consider trimming a piece good for better than $1.50 of profit. So this one trading at its session lows right around the $88 level. So that was an update from Scalp Trader, who had ZM on his radar as a potential short. Again, I don't think it was a official trade, but there may be somebody out there that took it as a trade idea, and that is what he do. Trim a little bit here. All right.
So, Jimmy,
next.
Do you think that we're going to see a short coming from Brett soon in the NASDAQ? I'm just looking at this pattern. This looks like an intraday pattern that he would be interested in shorting. You got any thoughts on that? The NQs?
Yeah, I do see kind of a descending triangle on a very short-term chart. I don't know if I know he was looking at this from the bullish side, so.
Yeah, but it seemed like he flipped in the midday with that 11:15. I don't know. I'd be curious.
The action.
It's just I'm just watching this. It looks like a pattern that he likes to short. So.
Yeah. I guess we should just ask him. Me.
I was just thinking it would be fun more as like a little side bet to see if he comes in.
Side bet whether he'll short. I mean, give me a moment and I'll tell you. No, I'm just kidding. Anyway, so let's. I think that's it's definitely something to keep on the radar. So load up your NQ. Maybe Chart Trade will be on there. All right. So this one, the next one we're going to talk about is not a technology stock, 3M. This one I haven't looked at since the earnings. This is one that Blue Chip likes to sell, and
still looking ugly.
Yep, still looking bad. This triple M, 3M, I guess.
These China headlines definitely can't be doing much to help it. However, we do have that 160 level that I'm kind of curious on watching here. To be honest, I don't have much of a conviction on this one in terms of a trade, but I did just want to highlight it because obviously it's a major Dow component. And, if we do see this 160 area hold, then it could be a potential nice recovery play here. They had a pretty good Q2, so, just kind of watching this one play out. And I'm real curious to see. I'd have an alert on for, like, say, 160 just to watch this thing if it does test this level. Because it could be a read for the entire market.
Yeah, I'm looking at the monthly chart for 3M, and that 160 pops up. Exactly, 160 is where the 100-month EMA comes in. Exactly, 160. So when I see something like that, I look at it and say, okay, well, we've already tested it and it bounced, and now it's come back to try to test it again. So this would be, I'm not sure how you want to say it, if it's a second or third test, but it becomes more vulnerable the more times it's being tested, right?
Yeah.
So what I want to see, so when I see that, what I want to do now is I'm going to see what the Fibonacci retracement looks like, and so I'm going to draw a low from the the March of 2009 up to the high that we put in back in whenever that was, January of 2018. All right, so guess what? We've got a 50% Fibonacci retracement right at 150. So therefore, I think 160 could be vulnerable, and if 160 is vulnerable, and the reason why I think it's vulnerable is because we've already tested that level a couple of times, and now if we come back down to the third test, what does Blue Chip say? There's no such thing as a triple bottom?
Yeah, I always make fun of him saying that. He says it all the time, but he doesn't have much of an opinion on a triple bottom at all or anything. It was another analyst that was here that I always attribute the comment to Scott just to
Oh,
Watch
okay.
him get fired up.
All right. So, okay, fair enough. But what I like about this one is if it does. Oh, guess what? He's buying NQs. Chart Trader is buying the
Wow,
mini
interesting.
Nasdaq at 74.6250. So I was right. So a half size position, chart trader buying the mini Nasdaq 74.62 and a half, half size position, and he's risking 20 points on this one. All right, now back to Triple M. I think the since I like to be picky on these type of things, I like 150. It's that psychological level. It fits a support zone because of the Fibonacci retracement, and you can see just on the chart that it represented pretty close to where an old high from back in the 2014 days. It represented an old all-time high where if you look really closely, you can see kind of like a triple top there, and then you saw it break out. So 150, between 150 and 145-ish. That's the zone that I'd be looking at in Triple M. That's where, I like to be picky on that.
Yeah.
So circle that. Write that one down. Between 150 and 145 on in Triple M. All right. Comcast. We don't talk about this one that much because it's. I'll tell you, Gavin. When I see a 5-letter ticker, I just think they're ugly.
Yeah, no, and I'd agree with you, but I just had it on the radar just because it looked pretty weak here. And I know that the new Fast and Furious movie, was it Sean Hobbs or whatever? I know it missed expectations, not saying that that's a key driver for it, but in a heavy market, coming into some key support, with an easy drop down to that 200-day moving average for broke. It just kind of had it on the short radar, but not sure if there's going to be enough activity going on here that's going to make it worthwhile.
Yeah, I agree. This is just not one of the type of stocks that I find that has sexy enough movement for me. Maybe down at the 200-day, it gets a little enticing, but yeah, tough one, tough call. I do see the weakness, and I do see. I would say that this one, it seems to be more inclined to trade lower and test that 200-day just because of proximity. But what we do have, which I'm seeing shaping up today, is an inside day. I bet we're going to have a lot of inside day on the TA scans tomorrow.
Which is typical for following a sell-off that we had yesterday, right?
Yes, and that's why I really like the inside days, because it historically will set up. Well, hold on. Before I get into my analysis of that, TLRA. Scalp Trader is getting involved in TLRA on the long side as a day trade. Looking to play another bounce here, starting with a half-size position, and he's going to risk 50 points. So I'm looking at TLRA, and you can see the big drop here. It's currently trading 7.39. It's looking to play another bounce, risking 50 cents on this half-size position. All right, now back to what I was talking about for inside days. The reason why I like to trade those is because I love the dust settled trade, and that's what you get when you have a big down day or a big up day. In the most recent case, we had the big down day yesterday. It sets up a lot of consolidation plays, and then what you want to do in the case of CMCSA, give me a second for that to pull up on the chart. Is you want to go with whichever side it breaks out. So you can be basically unbiased. Tomorrow, if this thing trades beneath, so tomorrow, if it trades beneath today's low, then it's a go with trade. And you know where your out is. Your out is the daily, the previous day's high. So that's why I like these inside days, because a lot of times you'll get the continued momentum, a consolidation for one day, and then the acceleration to the next move continues. Or buyers step right back in and you get that squeeze potential. So that's why I like those inside days so much.
Makes sense. Makes sense. I mean, you do well trading them, so
Yeah.
it's always good to find something that matches your eye and allows you to trade a little bit more effectively.
Yeah, and then the more things that you can add to it, like if you can apply any type of moving average or gaps, it can really help uh, give you more conviction on your idea, and that helps with sizing, right?
Yeah, yeah, no, it definitely does.
All right, so a stock that's been in consolidating pattern for quite some time now is RTN. This one is above the convergence of these moving averages. Do you like this one as a long?
I don't know if I like it as much for as long, just because we have the M&A activity in the back, so just trying to figure out what's going on with that. But I mean, it looks enticing here, considering how it's been beaten up, and it's got that range bound between 172 and 192. So I can't say I love it, but I do think that you got a pretty decent 2-to-1 risk reward here to the upside potentially. So not my first choice here, but the fact that it was holding it up so well while the rest of the market was selling off, I thought aerospace and defense in general, I thought was holding up pretty well, all things considered. So this was one that was just kind of sticking out as a steady play with that M&A backdrop that could find some bids if we see a turnaround in the markets.
Okay, yeah, I find the stock in no man's land. I don't know what to do with it. So when I see a stock kind of like this, I toss my hands up and say, I wonder what Gavin thinks.
Yeah, no, I'm not saying I'm in love with it, but it was just one that struck me as holding up pretty well, all things being equal with the rest of the market.
All right, and then Amazon, let's just take a look at it really quick to see what's happened since we started talking.
Holding that 200, right?
Yep, holding that 200. So, if you want to participate, if sometimes what I like to do, Gavin, is if Chart Trader has a bias, and I somewhat agree with his bias, then I'll trade what I want to in that same direction. And Amazon may represent a really juicy opportunity for those who don't have futures. You could do it in Amazon, and if you like, you can hold it as a swing trade, and then maybe you can apply basically the same principles that we were talking about, where you set up your risk reward in the same facets, and look for maybe a potential rebound and close that gap tomorrow.
Yeah, no, I mean that's definitely something to keep on the lookout for.
Yeah, one of the things I like to do is use my own strategies, and then if I find some tidbits and from traders who I respect, if Chart Trader has a long bias and it jives with kind of the way I'm thinking anyway, well then that gives me more confidence to put on a particular trade. In Amazon, this might be one of those cases, I think. So yeah, we'll keep an eye on that one.
Yeah.
All right, TEAM, Atlasan.
Yeah, this has been one of the stronger names out there in the markets, and has really held up pretty well in the face of some of the selling here. I've seen it dropping down to test its 50-day moving average and holding that at the moment with some key support at 133. So this is one of those names that I know a lot of people are probably out there thinking that it's due for a rollover, and it's one of those names that in this upward trend just continue to plug away. So I'd be looking at this one for an extension on the long side.
Yeah, this one's a tough call because looking at that chart, it does feel like it's so prime for a rollover, and people are gunning for it. But you have to think, all right, so I'm seeing this looking like a rollover, and so is everybody else thinking that this is a rollover. This is a high price stock. It seems like, oh, this one's vulnerable if the market cracks, but that doesn't seem to happen. So you almost have to think about it on a completely opposite perspective, right?
Basically, yeah, that's the point. These strong names that everybody's looking at like, oh, there's no way that this could keep running, and they go running out to try to short it on the first signs of any sort of weakness in the markets, and then just shakes off the weakness. This is a 110 million float 7.5% short interest, so not a sky high short interest by any stretch, but and it's certainly expensive at 27 times price to sales, but there's a reason why it's been expensive. It's been performing really well. It's coming off a pretty strong quarter, and that stock's just been in a steady upward trend that I'm not looking to short it here. But I think a little bit of a pullback could allow somebody to buy in here and watch for a test back of that 145 level.
Yeah, the trade, those for who might have been looking for it today, the trade was the resistance up here at the gap fill. We talk about it all the time. So if you're looking for trading ideas, look for that. If you were set on, I think TEAM was a short candidate. Well, you found exactly where it was. I don't like talking about hindsight trades, but I do like educating about them. And this is one of those cases where if you came in thinking I'm looking for a stock to short today, and if I catch this one, well, the resistance, that's your textbook trade right there. So if you're looking for a day trade, that's the type of trade you'd want to be looking for. So I think it's kind of too late to touch it now from the short side, just based on everything that Gavin had said. But when you do your pre-market scans, those are the type of things you want to look for. And really, you didn't even have to risk very much, did you?
No. I mean, like I said, if you want to get them from the long side, jump in at 135. Got 130 as your risk. So. Yep. Then 145 is the upside, so that gives you a 2-to-1 risk reward there, which I'm okay with.
Yeah, I think this one can even go 150. So I'm looking at even a 3-to-1. So yeah, too late to short, I think, though. Might have been a good day trade, but
well, people tried to short it after earnings and got whipped right out. So as much as people have tried to short this name, it just hasn't worked out for them.
Yeah, for sure. All right, so the next one we want to talk about is Intel, INTC.
Yeah, this does not look good at all to me. A lot of concern about AMD taking market share. AMD, of course, has a launch tomorrow for their new Rome chip, and just Intel's beaten pretty nicely on earnings the last 2 quarters, and we've seen the reaction that they've gotten. Just big rollovers there. Rallied up to 53 post earnings and raised their guidance in an environment that you haven't seen much of that. And now here it is breaking below the 250 days. So seems destined to come back in for a test of that 43 to 44 area, which could set up certainly as a buy. So something we'll want to keep an eye out on. But this looks like it's got a little bit further downside to me.
All right. Yeah, me too. It looks weak, but again, it's one of those that just doesn't have the type of movement that I like to see in these stocks. I can't make really a case to buy it, and I'm not sure selling it gives me the type of risk reward that I'd like, because you've got that gap, and I always feel like I need to risk through the gap and through all the way to the 200-day. So even if it does try to make a swing low, you're looking at only like $3 from here, and to the upside I'd have to risk 4. So that's why this one makes it really, really tough for me to get involved in Intel. So for me, it's kind of a no man's land. Although I do agree with you, it does look weak.
Yeah. So one we'll keep an eye out on, but not looking at this as a bounce candidate.
Juniper, JNPR.
So this one's simple. Buy it at 24, sell it at 28. It's at 24.
ChannelingStocks.com, Bob. You remember that commercial?
I mean, just look at this weekly or monthly. I mean, it's just all in a channel, and it's at the bottom end of that channel right now. So, it's one of those, if you like the name, here's your chance to jump in and buy it. I don't love it, but it was just a level that was sticking out to me.
Yeah, it's tough for me to this I don't know. Does this scream value trap to you?
No, I don't think I mean, there's too much there on the business side. It's not like a L Brands where, their business is just slowly eroding into oblivion. I mean, they're still getting pretty steady orders, and I mean, in the hot 5G space. So Scott's just noting it's still on the yield play. So you still got a nice dividend and a share buyback. So you got to like that capital return program that I don't think is as prevalent as some of the other value traps that we see out there. So if you're looking for yield and you're looking for a little bit more safety there and security in terms of stock action, you want a Juniper, or you want another name that's been jumping off for me on that is Dominion, ticker symbol D, for a dividend yield play that should have a pretty steady stock action. But that's why I was highlighting it as Juniper. Nice capital return plan and at the low end of the range. So I could see where you can make an argument if you're looking at it on a weekly on a downward trend that's been in place since last September. But I think overall, and the 5G cycle hasn't been completed yet, so you're going to see a little bit more on the what you might call it, the on the rev growth side as well. So I think overall you're looking at a pretty decent buy right in here. It's not going to be the most exciting play. You're not going to get rich on it, but you're not going to go poor either.
All right, and then looks like Chart Trader scratched that mini NASDAQ long. Let's see, that one is currently trading around the 74.58. And so he is currently flat. He's like just not loving the action here. Feels doesn't like the order flow and the evolution of the pattern. So he is now currently flat. All right. Now, Dirk Benedict's favorite stock, StarBucks.
Yeah, no, I mean, this looks pretty good. I mean, this thing hasn't missed a beat. It's pulled back to 93, I guess, if you want to call it a pullback. But as long as it holds up that 94 gap up from earnings, which were pretty good, then I think you're fine in this one. And, you just want to hold on to it and continue to watch it go higher.
Yeah, did you get that reference?
Which one?
Dirk Benedict's favorite stock, StarBucks.
I don't know who Dirk Benedict is offhand.
Oh, he played Starbuck. He played Lieutenant Starbuck in Battlestar Galactica.
Okay. All right. I did not realize his name was Dirk Benedict.
I don't know why I remembered that, but yeah. So anyway, but yeah, I agree, man. This one, I guess it's somewhat vulnerable to a gap fill, but if it does, you get gap fill support. So if this one goes down to 91 and a half, this one's ripe for the pickings. Actually, you know what, Gavin? There's another one. There's another gap, but it's way lower at 85. I don't know if it gets there. The thing about this one, it's hanging in there despite the big sell-offs that we had the last few sessions. This one's been hanging in there nicely.
Well, yeah, that's the thing. I mean, if 93 gets broken, then I would have thought if that 93.50 area, which would have been the July 31 lows post earnings, got broken, and it did yesterday, then we would have seen a little bit more selling pressure, and certainly it dropped down to 90 at least, but still holding in pretty steady there in a heavy market. So I thought that was impressive.
All right, so let's talk about LEA. This is one we don't talk about that much.
Lear, it's obviously a stock that's involved in the heart of the global trade, with auto parts just being such a key supply chain cross-country area. So Lear, it just looks really weak. And that's why you want to have it on the short radar. If you look at it on the weekly basis, it's kind of got that head and shoulders type pattern that's just itching for the next leg down.
It is. Wow.
I think that I'm not looking to be the hero to jump into the auto parts area first and buy this name. in a break here definitely sends it down to 100 at minimum, I would think, and probably a break below that as well. So I just wanted to highlight this as one of the weaker looking names and a one that I'd have on the radar for a short in case we do see any sort of further breakdown.
Yeah, I agree. I'm writing that one down too because this one looks primed. And then, some of the ones that we mentioned that had a chart that was similar to this were trading around the 106, 107 area. So you bump into that 100 psychological level. This one, you've got some room to go. It's trading like 116. So
Yeah.
this one. Yeah, I think this one is
little bit of a
poised.
downward leg before you hit that 100th psych for sure.
Yeah, I like it. That's a good one to point out for sure. All right, so I wrote that one down. We'll have to circle back.
And I mean, you got so much going against it with that global supply chain again, too.
Yeah, I thought they were in Jets. No, Lear Jets. No, they're not the same company.
They might do some stuff with Jets. I was under the assumption that this was an autoplay, though.
You would know better than me. All right, so CHGG. I have no idea what they do.
They are a software play on the student learning side, so similar to LRN, I suppose. But I mean, this was just holding up so well. It basically helps students. It's a platform for students for studying for their LSATs and different classes. Also provides like saving money type tidbits, and it's got a couple of materials as well too, all through their digital services. But name was just holding up really well, and that's why it kind of jumped off the page to me. Just sitting above this 42 area. Had it on. It's got a high short interest too. 116 million float with 16.4% short. So the fact that it was just holding up so well, obviously, if you're short it, you're probably not looking to cover it yet, but that could change if it starts getting back up to that 45 area. It's not like the sellers have jumped in here and moved to the sidelines here to let those shorts have their way. Just been holding that upward trend, so I kind of like it from the long perspective. That could turn into a potential breakout as well.
Yeah, and I want to highlight something here because this stock gives me an opportunity to show one of the things that I highlight a lot of times, and I don't know if people actually see them, but because of the way this chart has developed, you can see why I talk about it and why it's relevant, and that is looking at an old breakout level and how that becomes support. So look at the Trader Audio screen. You can see that we had on this daily chart kind of a double topping pattern that came into play in mid-March. So mid-March on this daily chart, you have this double topping pattern, and then we pulled back a little bit. Well, fast forward to this green candlestick that comes in July 8th. So you had the breakout. So it broke out from that old double top, and then it put in a high, and then look what happened. It came back down on the 25th and retested it. And that test, so there's the horizontal line, and you can see that after we broke through the old high, we came back down and tested it, and guess what? It moved significantly higher. I mean, if you would have taken that trade, you would have only had the risk. I don't know exactly what it would have been, but the heat you would have taken on that trade was less than $1, and you probably could have made, even if you messed it up, you could have made, $4 to $5, and at max you probably could have made 7 or 8. But that's why I highlight the old breakout zones. You throw a horizontal line at the old breakout zone, and then it becomes support. This is a fine example of how that works out. So thought I'd just take the opportunity to highlight that one since I saw it and why I talk about it so much. So no comments from Gavin. We'll move right along.
I'm sorry. I didn't know you were looking for a comment, but yeah, no. I mean, all good, valid points that you're putting out here. So, it's kind of what I'm looking at for the chart as well. So we'll see how this one plays out, but looks pretty good. All
right. So now CGNX. This one, Looks like another one of those that you don't want to be a hero for. That's my take. It's below all those moving averages. We keep trying to test these lows. Oh, look at we've got a triple swing low that I think is vulnerable. What do you think?
Yeah, no, that's why I pointed out. I mean, very similar to the Lear chart, and it's below all its key moving averages, and it's really just one bad piece of news from breaking down and dropping to that 35 area, I would say, which would be the lows from back in December 20, right around that December 24 area. So didn't like the way this chart was looking. It is sitting right on its 200 weekly moving average, though, Jim. So that's something that would keep me from shorting this right off the bat. But one of the weaker looking charts out there that would have me cautious and looking a little bit more to the short side on it.
Yeah, I'm glad you pointed that one out because that is somewhat of a concern. It has held, but it is. I would say it's vulnerable if it closes near the low, near the weekly lows. Then it makes it that much more vulnerable because we've had a test a few times. Let's see, we had our first test back in late 2018. Then it came back down, tested in mid-July, and here's another test here. So it does become more vulnerable. You'd want to see sellers step in and close very close, if not below that 200-week moving average. Then it really becomes a good short candidate, in my opinion.
Yeah, and that's why I wanted to throw it on the radar there. I saw somebody wondering if we were recording this. We are, and I'll be posting it a little bit later too for anybody that's interested.
All right, good. And then, so are there any other names that you particularly want to highlight here, Gavin? Any on your list that you find particularly compelling before we wrap things up?
Yeah, just we'll throw in Illumina, I should say, ILMN. Just looking at that on a weekly, you can see it's coming into some key support levels here. It's been selling off aggressively since its earnings report. And there was other news too with regards to a proposed merger with who is it? Pacific Biosciences. So this is one that I wanted to throw on people's radar. I got to dig into a little bit more on that M&A side of things, but I thought that was an interesting name. And then the other one, Procter & Gamble. It's kind of in that same boat as SBUX, where it just doesn't seem to be going anywhere. That upward trend seems to be firmly in place. So, not one that I'm looking to run out and short by any stretch, and would be looking at any weakness as a buying opportunity. So, I don't know if you got any thoughts on those two.
Well, in Procter & Gamble, you've seen that the staples are going to be one of the places where money's going to flock to, and this is a very good looking chart. I mean, this is as pretty of a upward chart as you're ever going to see. So I would not want to short it. There seems to be no reason to short this stock, and
if you're long it, just hold on.
And because it sets up, in case we have more volatility in the market, that this one will outperform the rest of some of those high flyers that we have talked about. This is less vulnerable than those.
Yeah, and I mean, it's trading at 21 times 4P, which is a little bit more expensive than the market, but not obnoxiously so by any stretch. Just get a dividend of 2.64%. You'd probably like to see them boost that up, but their organic sales growth has been one of the most impressive in the staples area, and you're looking for stuff that's going to be a little bit more steady at the moment. So if you're in Procter & Gamble, just continue to hold on there at the moment.
And if you're not in Procter & Gamble, let me show you something. Look at this, what's brewing today. An inside day, a very narrow inside day at that. So if the end of the day chart looks just like this, then it sets up for a pretty decent buying opportunity come tomorrow. And that's that's the type of things you want to look out for when you're constructing trading ideas.
Yeah, exactly.
All right, Gavin, unless you have any other stocks that you want to highlight, we'll wrap this one up for today, and we've got some names that we're going to circle back on and see what happens on these.
Yeah, no, definitely, and like I said, we'll be posting the replay of this afternoon.
All right. As always, Gav, thank you so much.
Thank you.